Hi everyone and welcome to today's morning report on Thursday the 13th of August with me, Rich Perry, market analyst at Handtech Markets. European trading session has got off to a decent start actually, and that's come despite the fact that the Chinese have devalued for a third day in a row. That's devaluation by another just over 1%, 1.1% in the fixing, taking that higher again on the dollar yuan. I pronounced that correctly. But the PBOC has, in a press conference, sort of moved to reassure markets that a continued currency depreciation, there's no real basis for it. So it's helped to stabilise sentiment in the markets, and there certainly has been a rebound. But in the larger scheme of things, considering the declines that we saw, the huge declines in the last couple of days, the rebound has not been all that massive, or that significant yet, and it just sort of leaves a few questions, I think, as to how sustainable the move is in terms of the rebound. There was a significant dollar sell-off yesterday, interestingly, and I'll show you on the dollar index. That sort of completed a top pattern. We've had this rebound in the dollar today. Again, I would question how far it's going to go, and I think that this is a bit of a corrective move that shows through also on the treasuries as well. Treasury yields fell to a 3-month low on the 10-year yesterday. Although it's rebounded slightly, it's still the fact that it's sort of falling away, consistently falling away as well. And I still think that there is further moves in this dollar correction, potentially near term anyway, and that I think sort of plays into a bit of an argument that the market is certainly seriously questioning this potential for a September rate hike now, but that's a long story anyway. In terms of what we're looking at for today, as I said, dollar has sort of rebounded against euro and yen, two of the currencies that were sharply stronger against the dollar yesterday. Unwinding some of that move, but not entirely yet. So, as I said, it'll be interesting to see how that moves out. We've got retail sales out today, and that could be an impact on the markets because the retail sales throughout 2015 has been very disappointing. Throughout this year, it's only beaten expectations once on retail sales, and the retail sales continue to fall away. Now, the expectation for this month is for plus 0.5% month on month, or 0.4 depending on what consensus figures you're looking at, and that is basically just sort of stabilising the annual or the year-on-year data at about 1% growth retail sales, which is not great considering it was considerably higher 12 months ago. So certainly you're not really seeing much in terms of retail sales coming through yet on these markets, and it'll be something that the Fed will certainly keep an eye out on, considering the moves that are going on internationally as well. So it could well be that case, but certainly retail sales have disappointed throughout this year. You've also got jobless claims. Sorry, let's get that back. You've also got jobless claims this afternoon. 270, basically bang in line with last week, is the expectation there. So, but the main focus will be retail sales. So that takes me to my chart of the day, which is the Kiwi dollar, and the Kiwi dollar has basically been in this downtrend channel for 3 months, and now I think this really is questioning this downtrend channel. Look at how the fact that it's now sort of trading sideways. And not only that, yesterday we hit a multi-year low, okay, fine, but it hit bang on that downtrend channel and rallied. And look at these momentum indicators that have been sort of improving for the last few weeks, picking up as this sort of consolidation has gone through. It is a consolidation at the moment. It is not a reversal pattern. Don't think it is a reversal pattern, and that needs to happen on a move above 67.38, which was that late July reaction high. And until that happens, it's not a reversal, but it would be a double bottom if it did break through that. But at the moment, it's just trading sideways. A little bit of a reaction lower today. Here's on the hourly. Let me just say also on the daily chart, it was very close to forming a bullish key one day reversal or bullish engulfing candle yesterday. Didn't quite make it into the close as it slightly dipped, but still, I think that this is consolidation more than anything at the moment. So what I've highlighted here on this chart is this green line here, which is the 60 65.50, which has been a pivot level actually. Interestingly, on this chart, quite a strong pivot level actually. And we're obviously just pulling back towards that now, and exactly how the Kiwi dollar reacts if it gets towards that will be very interesting, because as I said, it has been a very interesting turning point throughout this consolidation. So if it holds above that, then the outlook could continue and to move sideways. And just look at these hourly momentum indicators. Certainly the hourly RSI is indicative of what has become a consolidation, a sideways move, finding support around 30, resistance at 70, and again that's what we saw yesterday. So at the moment this is a consolidating chart on a medium-term basis, or near to medium-term basis, but it'll be interesting to see how this one turns out. But we have got this, as I said, pivot level at 65.50. Now in terms of resistance, obviously the near term would be that reaction high at 66.50 yesterday, and that comes in below the 66.73 reaction high from very late July. But at the moment it's just falling away slightly as this consolidation, or the near to medium term consolidation, continues. So I wish you good luck in your trading on Kiwi dollar today, and I'll speak to you later. Thank you.